Afternoon, everyone. Brian Stillwell from Elegant Exteriors. I want to talk today a little bit about insurance. In central New Jersey, April of 2023, we had a tornado come through. A little bit uncharacteristic for New Jersey, central New Jersey. I mean, I know this is a little more commonplace in the Midwest where a tornado may be not a strange sight to actually see one probably for the folks in the Midwest, but for New Jersey, certainly a rare occurrence. But in April, when that happened in central New Jersey, our telephone, it didn't stop ringing. A lot of homes suffered damage from siding damage, gutters blowing off, shingles blowing off, you name it, fences falling down, etc. But when we were contacted a lot to come out and take a look at damage, everyone was filing an insurance claim. And unfortunately, since homeowners don't typically go through an insurance process, it's a foreign process to them. They don't really understand how to go about doing it, when they should do it, and just the steps involved in doing so. And there was a few things that I found that homeowners were very much confused on that I wanted to just take a few minutes to provide some clarity on. Number one, your deductible. This is your responsibility as a homeowner. So, unfortunately, probably many of us have been in an auto accident before, but you're taking your car to the auto body shop, and the bottom line is that this is your responsibility. So even when an insurance policy is going to award you damages for making repairs to your home, they're dealing with the insurance company on your behalf, and you kind of drop off the car, get a rental car, come back 2 weeks later, your car's done, right? But what happened, right? There was money that came out of your pocket to make repairs, and that money basically is represented by your deductible, right? So every policy should have a deductible, usually $500, $1,000, $1,500, $2,000. It can vary depending upon what you select. That portion of money is a check that you must physically write to the contractor you hire to perform the work, okay? Period, end of story. Anyone who's offering to pay your deductible or work it into the contract somehow, in essence, they're breaking the law. They're committing insurance fraud. So make sure you understand it. Your responsibility is deductible. Two things, however, I want to cover in addition to that always was misunderstood. Two ways insurance companies kind of pay out. One is called replacement cash value, and the other one is called actual cash value. And understanding the difference is pretty important. I would always give homeowners the analogy, I bought my phone, I bought it brand new, unfortunately it was $1,500, but I bought my phone brand new, right? I've had it for a couple years. If I dropped it and smashed it and broke it, and I filed an insurance claim, insurance would say to me, hey Ryan, we know that to replace your phone, it was $1,500. That is the replacement cash value of that phone. However, you've had it for 3 years, okay? So you smashed it. So it's actual cash value. What it's worth today after I've used it and had it, interacting with it every day, is worth $400 or $500, okay? So there's a difference between the replacement cash value and the actual cash value. Replacement is if you were to go replace it today, it's going to cost you $1,500. The value of it today, your actual cash value, is $500, okay? The difference between those two numbers is what they call depreciation, all right? And it's important to understand the type of policy you have to figure out what the insurance company may be paying for. Do they pay on replacement cash value, or do they pay on actual cash value, right? So if they're paying on actual cash value, the insurance company's only going to mail me a check for $500. Now, if they're paying for replacement cash value, they're going to be paying me the $1,500. But they don't necessarily just send me a check for $1,500, okay? And this is where it can get a little hairy, right? They don't just mail me the check for $1,500. What they traditionally do is going to pay you what the actual cash value is today. So they would mail me the check for the $500. And what they're basically saying to me, hey, is that you have a replacement cash value policy. We're going to mail you the check for $500 today, representing the value of the telephone today. Now, go out and make your purchase. Go buy your new phone. And when you buy your new phone, make sure you keep the receipt. You send the receipt to the insurance company proving that the cost of that new phone was $1,500. Now, what they're going to do in that circumstance, as long as I have a replacement cash value policy, is reimburse me for the difference. They're going to reimburse me the depreciation. The difference between what they paid up front, the $500, and the cost of the new phone of $1,500. minus, of course, the deductibles, but they're going to then pay me that difference and issue a check, a second check to me representing payment for that depreciation. That is called recoverable depreciation, okay? So it's important when you get a scope of work from your insurance company after you filed a claim, you'll see highlighted on there is actually the replacement cash value and then the actual cash value, and then they'll illustrate for you what the depreciation is. And so as long as you basically have a replacement cash value policy, they're likely going to give you a check up front representing the actual cash value. Then once the work has been performed and payments have been made to that contractor, as long as you're showing them proof, maybe copies of receipts or invoices or your actual contract showing as paid and proof that the work has been done, they will then reimburse you usually for that recoverable depreciation if your policy calls for that, okay? So it's important to understand that what type of policy you have. You should do your research on that in the event that some damage were to occur, on your home. But then when you do get that scope of work, how to really understand the document. There's a lot of ins and outs and could be a lot more things to cover here, but the gist of it is understanding what that recoverable depreciation is, what the actual cash value is, the depreciation between the two, and making sure that your policy, what it's paying out for, so that you have a full understanding of how much money they'd be providing to you in the event that you needed to rely on insurance to help pay for damages. I hope this information helps. Take care.
Hey, thanks so much for watching. If you found this video helpful, make sure to give it a thumbs up. It really helps support the channel. And if you're new here or haven't subscribed yet, hit that subscribe button and turn on the notification bell so you never miss out on our future tips, guides, and updates. Got any questions or thoughts? Drop them in the comments below. We love hearing from you. Thanks again and see you in the next video.